Welcome to Echo Trade. It's Jeff Roth. We're here with Tom Carroll from Catholic Investment Strategies to talk about their Catholic Values Aggressive Growth Portfolio available in Echo Trade. Tom, quick background, 40 years or so experience of investment management, was at Northwestern Mutual for a while, managed, I think, on his own with the fund that he ran over $4 billion in assets. So no stranger to being responsible for a large amount of assets under his control. And and now you got the Catholic Values Aggressive Growth Portfolio available in Echo Trade. So Tom, thanks a lot for being here. Appreciate it.
My pleasure. Thank you.
So let's dive in. Give us, it pretty much says it right there in the name, the Aggressive Growth Portfolio. But it can give a little more insight in terms of, kind of the primary objectives of the portfolio and how you go about accomplishing that.
Well, sure. This is a portfolio that's focused on capital appreciation rather than dividend growth. And it's a little different, I think, than most aggressive type portfolios in that the aggression really resides in how frequently we're updating the portfolio. And it's not focused on your typical unicorn type companies. What we're really doing is we're marrying a value approach to good and improving and actually unexpectedly good fundamentals. So we're looking for companies that versus their own histories are very modestly valued, at least relative to the market, and at the same time are exhibiting increases in earnings estimates and reporting earnings surprises in the recent past.
Gotcha. So surprises obviously to the upside is what you're looking for. So if you look at earnings season coming around, and so you're highly kind of looking at what's happening with those reports, and if something surprising to the upside comes along, then that catches your eye.
That's right, but it's got to be married to the very interesting valuation as well.
Yeah, gotcha. And you said so you're updating the portfolio relatively often, and that's the aggressive side. So about how often are you updating the portfolio? What's kind of your time horizon when you're looking at a new position to hold on to?
Well, we don't think of it in those terms. So we refresh the portfolio roughly monthly, which is pretty quick, and there can be significant changes within the portfolio. So there's going to be a lot of turnover in this, and it would, for that reason, probably not be highly suitable for taxable accounts or people who are worried about taxes. But at the same time, by doing that, what we're trying to do is capture the most attractive companies at a particular point in time, regardless of what we may or may not own at that point.
Gotcha. So you're not looking at a certain time horizon, but you're just really active in updating the portfolio. So what would cause you to maybe lower a position or exit a position for a certain company?
Well, so lots of things. The valuation could be not as attractive. Hopefully that's going to be the case where a stock price will move up and it'll move out of that attractive zone. Or it could happen that a company, even though it had recently reported good results, another new set of results might come out that aren't that interesting. That would be a sad reason to have to get rid of something. But nonetheless, we're always looking to have what we think will be the most attractive companies in the portfolio at any point in time.
Got it. So you're not necessarily looking at hey, let's let the winners run. You're going to try to capture those gains dependent on like you said, the other criteria that you're looking at and the valuation that currently stands within where price is versus how you see the value of the company.
Yes, that's right. This is not a let the winners run kind of portfolio.
Gotcha. It's capture some winners and keep going and find some better values to keep moving forward. So I think you kind of touched on it, but what kind of companies are we really looking at here? I mean, are you looking at large cap, kind of the household name companies? Or are you looking at more smaller cap companies to invest in and kind of drive that growth? Where's the focus? Or are you agnostic?
Well, we're truly agnostic with one caveat to that. I guess it's not really a caveat, but one limitation is that we do control the average daily trading volume. So we're only willing to look at companies that have a certain dollar value to their daily trading.
Yeah.
Hopefully at some point through the good offices of Echo Trade, this portfolio will become sizable, and we'll have to worry about, impacting the market if we're making a lot of changes as we go.
Yeah. Gotcha. And so, I mean, like you said, it's a more aggressive portfolio, but would you say that this, with that aggressive nature, does it take on more risk than like your dividend growth portfolio, or how would you define that?
Well, that's interesting. It's, I guess, more risky in the sense that it will tend to have smaller, less seasoned companies in it, but at the same time, the valuation aspect of it puts some, floor under that. For instance, right at the moment, it's on average trading at single-digit price earnings multiples, which is in this market is pretty low.
Yeah. So the types of companies you're investing in is part of what helps to manage that risk. Is that what I'm hearing?
Well, sure, that and
the value.
as much right, but as much as the turnover is an attempt to capture the most attractive companies, at the same time, I said that a reason a company could get thrown out is because they have a disappointing earnings result, or earnings estimates start to get cut because points of view have changed.
Yeah,
those companies will get weeded out pretty quickly as well. So that that's another risk control aspect.
Gotcha. And so, are you looking at certain industries or sectors when you're deciding on what to purchase, or are you purely bottom up looking at, hey, like you said, there was a surprising earning report, and then the valuation factor as well? Is it purely kind of on an individual company basis?
It's all on the numbers, Jeff, and we let the size, the market cap, and the industries and all that just sort themselves out.
Yeah. And I guess finally, if you can talk about obviously the Catholic values portion of this, right? So there's a reason you kind of got into this, and you talk a little bit about it when we had another conversation about what attracted you to working with Summit Investment Management, which is kind of the parent RIA, I guess, to Catholic Investment Strategies, and it was that Catholic side that attracted you. So talk about how you guys go about kind of making sure that this is a portfolio that, like you said, you can kind of really try to capture those monetary goals and the growth, but also do it while kind of maintaining kind of structure within the Catholic faith.
Right. Well, everything we do is viewed through the lens of the U.S. Conference of Catholic Bishops' socially responsible investment guidelines. That's quite a mouthful. But that's a 28-page document where the bishops have gone in length to explain two things, really: what kinds of companies you should be avoiding, and obviously some of them are very obviously things like involvement in abortion, involvement in pornography, involvement in weapons of mass destruction, and there's a list of things. So those companies get cast out of the investment potential pool right off the bat. But then the bishops also want you to act as an agent for change for good in the companies that remain when you see them doing something that isn't quite so bad as the things that make you get excluded, but nonetheless are not quite right. And so we do that. We take a portion of our fees and spend those fees on Catholic advocacy, where we employ some people to actually work with the companies and try to get them to change their ways. And as much as an investment professional, I'm focused on trying to provide, great investment returns. Really, there is something more to life than just money.
Yeah.
I know you know that, and that's what we're trying to do. We're trying to marry the pursuit of investment excellence with morality.
Yeah, and I mean it's kind of counterintuitive, I guess, but God talks about money, I think, more than any other subject in the Bible, and how we're supposed to be shepherds with that. So to have, this portfolio in Echo Trade for investors to be able to, invest along the lines with their faith, and really appreciative of it, Tom, and really appreciate the time. So thanks for being here.
Oh, my pleasure. Thanks again, Jeff. Take care.